Let's get to Kevin Green now, who joins me for a look at what's moving markets. And I did mention that the latest central bank that we got overnight was the BOJ, holding those rates steady. But I really found what was interesting about what the folks over at the Japanese central bank are doing over in Tokyo right now, Kevin, is actually unwinding their massive ETF portfolios, which is going to, get this, take more than 100 years. But Ueda says, well, that's not my problem.
Yeah, it's an interesting strategy. I mean, if you look at every central bank, they all have their own unique quirks, if you will. And the Bank of Japan, if you're kind of looking at their portfolio mix, has been dealing with several different issues. Obviously, the volatility when it comes to their currency has been something that has been top of mind for a lot of investors. Looking at the yields, especially on the long end, if you're looking at the Japanese government bonds, the 30-year has been aggressively high, making new all-time highs over the last month or so. And they do have these ETF holdings that are kind of the residual effects of monetary policy that we've seen over the years. And so unwinding those ETFs will take a considerable amount of time. Obviously, that's going to take cash out of the market. That also could depress some of those ETF prices, which can also then lead to equity prices seeing some headwinds here. But this is in the effort of trying to not only wind down that balance sheet, but also trying to stave off inflation. Now, Japan has been looking for inflation for the last 10 years, 15 years, and now they have it. But unfortunately, it's not the inflation that they really want to see. It's food prices moving to the upside very aggressively over the last year or so. And now it's starting to abate a little bit. Rice prices are coming down here, which is a major component of their CPI economic indicator there. But you are still seeing some sticky areas of inflation and not really that organic growth that you would love to see if you were a central banker, where GDP growth is outstripping or outpacing inflation. That's just not the case right now. So we did see the decision 50 where they kept the rates at 0.5% at this point in time. 7 members voted for it to stay at the current level. 2 members wanted to hike those rates here. That might be on the horizon later on. But one thing to kind of note, Sam, the yen is probably one of the most volatile currencies if you're looking at developed markets. But if you look at the yen US dollar chart, it's been consolidating for the last 6 weeks or so. Kind of unusual when it comes to the yen. Once again, a very unique problem when it comes to Japan just in general. And for the most part right now, it seems like the equity markets across the globe are okay with these current measures that they're taking.
And obviously, yen appreciation is something that many out here watch, Kevin, as we know, because of course what we had last year with the episode with the unwind of the carry trade and whether we could see some of that further. But also, I was speaking to somebody about how yen strength could also be favourable for flattening out that yield curve, and we could actually see some of that taking place here in the US as well because of that. So that's obviously really interesting to keep an eye on. But just keeping our focus in Asia, we obviously have reports now out of this Trump-Xi phone call underway. Doesn't look like we've got many details yet, but what should traders and investors be looking out for today from those conversations, Kevin?
Yeah, I think that call is still ongoing. It actually started an hour earlier than what we expected here in the U.S., which is fine. And they are going to go through that call, talk about several different things. Obviously, TikTok is top of mind for a lot of traders and investors. It seems like it has now become a little bit more of a cornerstone when it comes to the trade deals just alone. And maybe they do finalize a deal, which, in all actuality, it just appears that TikTok is kind of franchising their business over to the United States, maybe coming to a compromise from what a lot of lawmakers really wanted to see, a little bit more aggressive action this time last year. That being the case, probably also talk about other trade-centric topics, as we still have high tariffs on a relative basis on China. They also have taken some actions as well. Maybe we do see some progress here in the near term. Sam, I think the biggest risk that you have is any type of breakdown in some of these discussions, or maybe not coming to the table or coming to an agreement or trying to progress some of these trade deals and try to reduce some of the tariffs that are out there. And if that risk does kind of maintain, that could create a little bit of equity volatility. It doesn't seem like we're going in that direction, but it is something to be top of mind. There was also some comments from President Trump yesterday in the UK around Afghan bases and things of that nature to kind of monitor China missile silos and missile development, something that was also a very unusual comment that was made. So let's see how this all plays out, and we probably will get a transcript after the call is ended, and we'll see how the market actually takes it.
Yeah, and I mean, there's just so many motivations as well to put the squeeze on China as far as Trump is concerned with these tariffs. I mean, you've got the, trade relationship. You've also got, obviously, the fentanyl and then the pressure with the Russian oil purchases as well. So certainly interesting to keep tabs on. Just bringing it back home, you're looking at the VIX as well. We're just seeing that right now at about 15 or so, but obviously quad witching or triple witching, as they say. Do you anticipate to see some more volatility in volumes throughout the session today?
Yeah, looking for volumes to increase pretty much across the board when you're looking at equities as well as equity options. We do have triple witching here today. We did actually have the expiration of two of the three components early on this morning. This morning here, if you're looking at the index futures for September now rolling off, and then the AM options for the indexes also rolling off. So at the end of today's session, we will have the quarterly equity options, if you're looking at individual stocks, expiring, and that could create a little bit of volatility. What's actually interesting going into this expiration, and a little bit different than what we've seen all year, is that we've had two previous quarterly expirations where we have volatility actually increasing going in and then crushing after the event about 2 or 3 days after. We also have the January leap expiration that I have highlighted there. That's a big expiration when it comes to options. This time around, we actually had volatility crushing going into this expiration, which is highly unusual, not only over the last year, but if you're looking at the average over the last 15 years. So keep your eye out on that. Do we see volatility actually re-rating higher? And you are starting to see some bearish flows the last 30 minutes of yesterday, and even this morning, some bearish put buying activity taking place as well. So a readjustment when it comes to institutional positioning. The following Monday is usually a down day for the September expiration. We've got to be mindful of that. But once again, we're kind of bucking the trend here when it comes to seasonality just in general in September. Let's see if that actually stays the course.
Yeah, for sure. Okay, important to highlight. Thank you so much for that, Kevin Green. Appreciate it as always.